So happy New Year. And I think I'll just let Lynn get started.
Welcome to our January Director's Cut report and press conference. And we're talking about November production. So we're always lagging a couple of months behind. I know people, sometimes maybe we have some new folks. The reason for that is it takes the operators a month to pull their numbers together, and then they file them with us. And they're due by the first of the month, so they always lag about 2 months behind. Pretty much steady as she goes with regards to November. I know when we talked last month or even back in November, we were a little concerned about the weather that we've been having, and we did have a week of pretty cold weather in early mid-November, and that seems to have had some impact, although I think the main impact holding production steady is gas capture. So we'll talk about that in just a minute, but we saw a 0.2% drop in production, just a couple thousand barrels a day, and that was just flat to October. Kind of the surprising thing, natural gas production still went up 2%. And I think, in evaluating, looking at where the drilling rigs are and the completions, what we've seen as the rig count has dropped from 65 down to 55, that operators have retracted kind of back more into the core area of the Basin where the higher gas oil ratios are. So even though oil production went down just slightly, gas production went up 2%, a pretty significant increase, new all-time record high in gas production, 3.134 BCF a day. So, when we're talking billions of cubic feet, it's tremendous volumes. And like I said, we think that is because as we've reduced the rig count by about 10 over the last 6 months, that they have retracted into the core area where the gas to oil ratios are higher. You see that we have a little bit lower permitting numbers, a little bit lower completion numbers. That's weather related. We're into the winter months now. And so if you have a fairly heavy snowstorm or some extremely cold weather, like short, reduce accurate time. So try to deal with the extreme cold and how slow that makes all the work go. So we're still staying above forecast completion numbers, still staying above forecast in terms of oil price and production numbers. So everything is pretty steady. Interestingly enough, the reservation sort of moved in the opposite direction again, even though we had the same rig count and have consistently for 3 months. The rig count on Fort Berthold has been up and down. And so it's down again by 3 rigs. Those have moved off the reservation and are working primarily on Forest Service lands in and around the same area. Production actually went up about 3,600 barrels a day there. So about 1.5 times what the statewide production went down. You can also see when you look at the U.S. crude oil stocks that we've now gotten back down to about the average, the 5-year average in terms of crude oil stocks. Natural gas, on the other hand, is building again. And perhaps this cold weather that's setting in now, we'll see some improvement there, but it has really caused natural gas prices to deteriorate significantly. And so we're looking at well under $2 per 1,000 cubic feet for natural gas going into northern border. That just doesn't incentivize much in terms of natural gas production or infrastructure. So again, the regulations and the gas capture are going to have to drive that forward. And what gas capture does is it ties natural gas processing to oil production. And that is something that's very profitable at these prices. And so that's really the effectiveness of gas capture, is to tie natural gas infrastructure to oil production, which is profitable, because natural gas production and processing is not profitable at this point in time. Happy news on the gas capture side. Everything except non-FBIR Bakken is up, and some of it significantly. For example, Truss Lands, Fort Berthold, up by 13% over a month ago in terms of gas capture. So we're making some real progress there. We are not at 88% yet. However, I think when the December numbers come in, we're going to see again significant improvement in gas capture, because Elk Creek, the natural gas liquids pipeline, came online in early December, and that is enabling 4 of our new gas plants to go to full capacity. So I think the December numbers, and certainly the January numbers, are going to look much, much better. Now, in terms of production, indications, kind of looking at the daily anecdotal information that comes in, looks like December, January production is going to be pretty flat to October, November. So I'm not expecting significant oil production increases or even really significant natural gas production increases in the December and January timeframe. We'll see what winter holds for us. Really no activity on the federal regulatory side. We have not heard a peep out of PHMSA, so we don't know how that's going. We are looking forward in the very near future to the U.S. Forest Service releasing its revised EIS, leasing EIS. So they're, over the past, I guess I would say about 7 years, there have been 350 federal tracts that have been suggested for leasing by oil and gas operators that are subject to current leasing stipulations like administratively not available or no surface occupancy. And it's anticipated that this new EIS is going to change that. It's going to be rewritten in terms of horizontal drilling, with 2 and 3 and 4 mile laterals. Some of these lands are now going to be available for leasing with different stips. And so once that comes out, we're expecting a very busy year on the part of the BLM in terms of lease auctions. And, they want to get all that done yet this year. So there could be a very high volume of leasing activity on federal lands. Those are 10-year leases, so it's not going to drive any immediate drilling or permitting, but over the longer term, there are some really key core lands that have been impacted by that within the core area of the Bakken. We anticipate are going to be opened up for leasing. So over the longer term, it should impact our production, our drilling, completions in a positive way. So that's the November 2019 report. Pretty much steady as she goes.
Okay. Any questions in the room?
With the wet fall and the somewhat snowy winter, that could probably affect the numbers. Any thoughts on that?
Yeah, so the question was, we had a very wet fall, and we've already had a pretty snowy winter. What effect might that have on the numbers? And again, I'm really expecting these numbers to stay flat for the next 2 or 3 months. Where I see the impact happening there, Dave, is when we get into the spring and we start to have the spring thaw, we could have a serious, lengthy impact in terms of road restrictions. We've had some pretty significantly cold weather, so we've got deep frost, and we had a very wet fall, so things froze up in a very wet condition, and so we could have very extended road restrictions come spring. I don't really expect much impact, like I said, December, January, February, March, but when we get into mid-March and beyond, we could see a situation where road restrictions stay on till Father's Day instead of Mother's Day, and a whole month of down months before things turn around. So.
Is that just because we expect like flooding and just really wet conditions in general?
Yeah, the question was, is that because of flooding and wet conditions in general? And what it really has to do with the conditions of the county roads and the township roads. They are not able to carry oil field type loads of 100,000+ pounds on a semi-trailer. And so Operation Prairie Dog has not kicked in yet. Those, as you heard, so those roads have not been improved using those funds. That'll happen hopefully this year. So we won't have a repeat of this story next year. But those roads were saturated, and the road bed, underneath the road, the support structure was saturated going into fall, and now it's got very deep frost in it. And so it's going to be really soft come spring, and it'll take it a good while to thaw and to dry out. So again, our anticipation is that Operation Prairie Dog funds will become available now in 2020, and this construction season, many of those roads will be significantly improved. And so next year, probably not as much of an impact, but 2020, it's going to be significant.
Are those all gravel roads?
Yes, they are. So the question was, are those all gravel roads? And yes, they are. And not very many of the gravel roads out there have been reconstructed to carry these 100,000-pound loads. And so all the lease roads and gravel county and township roads are going to struggle.
And then I feel like you might have addressed this at past director's cuts, but I can't remember off the top of my head. You said, the rig count has been dropping over the past 6 months. What's causing it to drop?
Mm-hmm. Yeah, so the question was, what caused that rig count to drop from mid-60s to mid-50s over the last 6 months? And the primary thing was the lower oil prices mid-year, which dried up the capital markets. So it really has been a lack of capital. The venture capital investors and the stock market investors pulled away from the exploration and production industry starting about the second quarter of this year. And so many of our venture capital companies really ran out of money third quarter. And the publicly traded companies even were seeing very low stock prices third and fourth quarter of this year. So everybody had to operate off cash flow, and cash flow can fund 55 rigs. It can't fund 65 or more. And so it really is a capital investment thing.
And then one more on kind of a related note, you talked about how natural gas prices are pretty low. Can you talk about the factors influencing that?
Sure. So what kind of factors are influencing low natural gas prices? Dominantly, it is the development of Appalachian Basin gas reserves. Ohio and Pennsylvania activity has slowed, but it continues to be pretty robust. And we don't yet have liquefied natural gas exports of any kind of substantial volumes to come off the East Coast. Once the Shell ethane cracker in Pennsylvania is online, and a couple of those liquefied natural gas export terminals on the East Coast are online, that should relieve that some. But they have the ability to produce natural gas at significantly lower values than anything we can do out here in the Rockies or the Midwest. And so they continue to oversupply the natural gas market substantially.
Is there any news lately about additional drilling along the North Dakota-Saskatchewan border? There's quite a few rigs in southern Saskatchewan, so they're just wondering if they're coming this way.
Great question, and we have a few cases on the docket from our Bottineau County, Burke County operators to kind of get that restarted, but it's still pretty back burner in terms of 2020 activity. Our oil prices, although significantly improved, I mean, we're looking at what, $3-4 a barrel better than we were, say, in September, are still not high enough to make much of that on the U.S. side profitable. So we still lack $5 to $10 a barrel in terms of oil price to make the U.S. side of that, those Spearfish and Mission Canyon place up there profitable. So it's going to be pretty slow this year.
since we're at 83% gas capture, 88% of the target, what was going to take to get to 80%?
Yeah, so the question was, what's it going to take to pick up that 5% of gas capture to get us from our 83 to 88? And I really think the key piece just went in place in December, and that was the Elk Creek pipeline. So we had 4 new gas plants all start up in third and fourth quarter of 2019, but they all were running at significantly below nameplate capacity because their natural gas liquids were committed to Elk Creek. And until that came online, they couldn't operate at full capacity. So what it's going to take is finally the Dimmick's Lake gas plant coming online, and then Elk Creek coming online, and that should get us to 88% capture. Now that next piece, that next 3% to get from 88 to 91 is going to take, and happily we've seen announcements for 3 additional plants, Dimmick's Lake 2, the XTO plant in Williams County, and the Tyler gas plant expansion. So all 3 of those are going to have to be online for us to make that next run for that 3% to get to 91%. But we should have the export capacity in place for those plants to come up and run. One last piece that's really inhibiting things is natural gas is pretty well trapped north of the Missouri River, and Justin can maybe speak in a lot better detail about this, but late 2021 is it that WBI is going to have an expansion in place to get around that. So we don't have all the connections we need across the Missouri River, across Lake Sakakawea. So we've got a bigger problem with future gas capture north of Lake Sakakawea than we do south. And there are some pieces that won't fall into place until 21 to move that gas across there. So even though it's very nice to have a big river flowing through the middle of your oil field, it's got some downside too.
You had referenced the XTO Williams gas plant. Is that actually the Outrigger plant now?
It is,
Yeah.
yes, thank you. And my apologies for that. So Outrigger is their choice of midstream company. They've been operating in Colorado and working with XTO quite a bit. It is largely, at least the initial plant, is largely going to be dedicated to processing XTO's gas. They cannot develop their Hoffman and Grinnell units that we put together until they have that gas processing in place. So again, all of that has to be synchronized, and that's what's really driving that plant, is that they've got some fantastic resources on the north side of the Missouri River, but the gas has no place to go until that plant gets built. So you're right, it's the Outrigger one.
I have one question related to the new year in 2020. Is there anything, just looking forward, that may positively or negatively impact oil price just based off of today's climate?
Great question. We're not seeing anything. I mean, it looks like the world is going to be slightly oversupplied with crude oil through the end of this year, or at least there will be the capacity to meet the entirety of world demand with plenty of surplus. And in fact, we saw that when Russia and OPEC had to sit down and decide that they were going to cut an additional 500,000 barrels a day from their production in order to try to balance the market. That looks like it comes to an end, fourth quarter of 2020 or first quarter of 21. And I think we saw evidence of that when we saw the things that took place in Iraq and Iran just week before last. Oil prices spiked and went down 2 days later because there is plenty of oil. And so there doesn't appear to be anything on the horizon that will significantly increase oil and natural gas prices in 2020. There is some conversations going on for China to become an enormous importer of U.S. crude oil. But that's a year or so out. That would have a major positive impact. There doesn't seem to be much out there that's going to cause a negative impact either. Steady.
Anything else in the room for Lynn? All right.
Thank you.
Sorry, I was thinking when you said XTO. Little XTO.
Okay.
Yeah, well, perfect. Good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We're going to kick off right away. We're looking at crude oil production around the Williston Basin. One thing I'll point out, Eastern Montana, I keep watching every month as those reports keep coming in. They report crude oil a little bit differently than North Dakota does. As production information trickles in, they will keep adding to their database, and so it's a little bit trickier than what we've got in North Dakota to find that cutoff date of what to use as reasonable and what is considered incomplete. But we are still seeing July, August numbers down quite noticeably from what they were earlier in 2019. So we'll keep an eye on that. We'll see if additional production continues to trickle in. But again, 10, 15,000 barrels per day is nothing to not notice. So we're going to keep an eye on that. South Dakota's remaining fairly steady, just over 3,000 barrels per day. Looking on slide 3 at the changes month over month for crude oil and natural gas production. Again, as Lynn alluded to, a pretty typical type of month over month growth, what we've been seeing for natural gas. When you just look at just purely the volume standpoint, it's unique in that crude oil did not grow at the same time. But again, for a month over month change, pretty typical and something that we're kind of forecasting and expecting on the natural gas side. And again, as we look at the rest of the winter months ahead, I think Lynn was spot on. I think things are going to be pretty flat to potentially slightly weaker, if depending upon what Mother Nature does here in the next several months. Looking at crude oil transportation, that market share changes. A couple minor shifts that we noticed going from October to November. We did see a slight decrease in the market share of crude by rail out of the region, and we did see a spike up in exports of crude oil through the border ports of North Dakota, as well as a little bit of higher increase in market share on the pipeline network. So that was definitely interesting and noteworthy. If we look at slide 6, again, still hovering somewhere in that 270,000 barrel per day range for estimated crude by rail out of North Dakota. We look at the destinations. Some of these numbers have been updated. I know last month we were looking at September as the most recent data point from the EIA. They revised their September numbers. Last month, you remember we were talking about the East Coast, or PAD 1 being the dominant mode for that month of September. They've since revised that, and we're now seeing PAD 5 continue to be the dominant destination, but still a noticeable spike up that did take place in the month of September. And I think for a lot of the reasons we discussed last month, with deliveries to East Coast refineries off waterborne sources. So just a small correction on that front as that new data came in. And again, as we look at the near term, the next several months ahead, I expect we'll continue to see the PAD 5, the West Coast, be the dominant destination for that crude by rail out of the region. Just a quick update on pricing from that October time frame. Again, PAD 1, PAD 5 highest priced markets when you're looking at what the refineries on average were paying, and then again followed up by the Gulf Coast. But when you look at those refining centers on the east and west coasts, the ability to move that crude by rail car and take advantage of some of those higher priced markets is what the marketers are doing today. There's enough economic incentive to do so. And then where we see things today on slide 9, just a quick update, just over $6 spread between that Brent WTI. So again, nothing major that is going to be shifting major decisions out of the region. We'll continue to see a similar mix in the near term for pipe versus rail out in North Dakota. And then slide 10, this was just that quick update. So record levels were being reported for imports and exports from the U.S. Trade Commission. Again, this is something there's not a lot of transparency and information as far as who's doing it, what they're doing with those barrels, how many are just coming through south rail or truck traffic, and how many are being delivered in North Dakota, and vice versa. So again, we're just taking the numbers at face value as they're reported and trying to wrap that up and make sense with everything else that's happening in the region. Switching gears now to natural gas, we did see some additional shifts here as well. The overall percentage, that green portion, 83%, that did not change October to November for non-confidential wells, but what did change noticeably was the reason for that flaring. We saw an increase in flaring from wells that had zero sales associated with them, and a decrease in flaring from wells that did have a pipeline connection. And I've got a few thoughts and ideas behind what was taking place there that I'll cover here in just a moment. So what this looks like on slide 12 historically, not out of the norm by any means, but just a noticeable uptick in that flaring from wells that were not selling gas in the month of November. We look at slide 13. This is one I pull up every month, and sometimes it might seem mundane to pull it up, but I think this tells a pretty clear story. What we're looking at is new wells producing natural gas and new wells selling natural gas. And in a perfect world, the red and the black line would be hand in hand on this graphic. But as you can see in the month of November, new wells producing natural gas and new wells selling gas, there was a significant disconnect in the month of November where what was taking place, and it's not that, typically we're looking at this graphic and saying, okay, are the midstream companies out there making connections at well sites? And so it's not that I don't believe that the well sites weren't being connected out there. It was that during that month of November, there was no outlet for that connection until the Elk Creek system came online in December. So I'm expecting as the December numbers come out, we'll see a seesaw effect here where we'll see the rebound as wells that were pipe getting put in the ground, connections being made in November, but they just did not have a sales outlet in that month. As those plants came online, as additional NGL takeaway capacity came online, now those wells were freed up to flow and sell their gas. So, but again, I think that does do a lot of the explaining about why we saw that shift percentage-wise for flaring. But I do think that there's a very quick solution that was being put in place that hopefully we'll see in the numbers here very soon. Another interesting note here on the looking at gas processing capacity. I think everyone is well aware of the announcement by Outrigger very recently for 250 million of additional capacity in Williams County. That's now been factored into both our short and long-term expectations for gas processing in the region. If I add up, there's 6 projects right now that are in the works or on the table for development, and those 6 projects add up to almost 1.1 billion cubic feet of additional gas processing capacity for North Dakota. So very, very substantial investments on the table in order to address gas capture in North Dakota. So that's very, very encouraging. So along with the gathering and processing, a lot of additional work also being done, not only what we saw come online for natural gas liquids, but there's a lot on the table right now as well, trying to address the residue or the dry gas scenario, because we do see in the next 3 to 4 years that becoming the next major constraint point for North Dakota. So with that, I'd be glad to answer any questions.
Going back to, you said 6 projects on the drawing board right now?
Correct.
How many, none of them have been permitted yet? Or?
A number of them have, so the question was, of those 6, how many have permit approvals, how many are still pending? I don't have, there's only one that I'm aware of that has not gone through some type of, well, yeah, just one, just Outrigger. I don't believe it's gone through the PSC process yet.
Is the Washington Rail Rule having any impact on any flows out of North Dakota?
We're seeing pretty consistent volumes still from the region, so it's real difficult to say how that's all being factored into it, but the numbers, are speaking for themselves that things have been fairly consistent.
Justin, I feel like I might have asked you this if it came up last month, but do we have a feel for why in eastern Montana production has gone down?
So the question was, what's taking place in Montana? It's the lack of new drilling and well completions in that area. So every well has their production decline profile. And if you're not adding new wells, having completions, naturally the oil field will decline in production. So we do have 2 active drilling rigs in Montana today, according to Baker Hughes. So that's encouraging. That's up from 0 earlier this year. So there's some additional interest in that region. There's some folks looking at, if activity does start to pick up in that eastern Montana frame for gas gathering and processing and getting that into the full gas capture network. So we know that eastern Montana has oil. They've had success in the past, and I think it's just a pricing and activity scenario that at what point do things get more active on that side of the border?
I apologize for this question, but in South Dakota, it's not a lot, but are those all in Hardin County? No.
Lynn would probably know better than I do about South Dakota, but
99%, yeah.
Yeah.
Okay.
There's a little bit down by Edgemont, and that's it. A little bit of oil production in the southwest corner.
Is Edgemont considered Williston Basin?
No,
Oh,
that's not. I'm sorry. So yeah, all of yours would be Williston.
Yeah.
Yeah, Edgemont would be the DJ Basin.
Oh.
Yeah.
Do you have any theories as to the whole import-export issue with Canada and why those numbers are up? Or is it really just, we don't know?
So barrels that are coming down through, so what's being picked up is additional rail volume. So Canada, with pipeline constraints that they've had, they have been increasing their use over the past year of crude by rail. And so some of those may be coming through North Dakota and being picked up in the numbers. Other options for those barrels going north and south, I mean, there's marketing scenarios. If there's production in the northern tier of North Dakota, it may make more sense to just truck it north and get it onto the pipeline network north of the border, and vice versa. There may be deliveries south into North Dakota. There may also be blending strategies by marketers to hit certain crude specs, where they'll blend X number of one type of crude with another type of crude in order to maximize value. So some of that's taking place. And then, are there barrels being moved north even further as any type of diluent up into the oil sands? Again, those are things that are kept very confidential by the marketers, so I don't have any color on that. Yeah.
And I apologize if you went over this already, but it shows the November numbers show a daily increase, but the month being down overall. Is that a typo? And what would be kind of a correction on that?
Which page are you looking at there?
Just the first page of the monthly update here for natural gas.
So natural gas, so the natural gas production was up.
Okay.
October to November. The crude oil was down just very slightly. Yeah.
Sure, it's just in November, it's showing that the average daily was increased, but the average month, or the monthly total is down.
Oh, the monthly, yeah, that had to do with the number of days in the month. Yeah.
Okay.
Yeah,
My bad.
sorry. Yeah.
Sorry about that.
Yep.
Any other questions for Justin?
Just a curiosity. The Tioga gas plant was built in the 1960s?
So the original plant was,
1954.
1954.
there you go.
How many times has that been expanded?
Let's see.
Is the original plant in service anymore, or did they completely take that out and build a new?
It's still operating.
Yeah.
It's still collecting stuff from Beaver Lodge
Okay.
and Tioga Field, just 2 fields. I'm trying to think, it was expanded. Well, it burned down in '86 and was rebuilt, and then it's had 2 expansions since then. Yeah, so it's rebuilt in an expanded capacity in '86 and been expanded twice since then. So this will be expansion, I guess you could say 4, 3 or 4th time.
Okay, well, thank you very much.
I have a little story about that